Welcome back. So didn't we spend some time yesterday talking about what's happening to the oil and gas listed stocks on the market? And on the same day, they found their bearings. See if they were listening to us here on the program. Check through the big seven sisters, the big seven oil retailers listed on our market. So let's get started with about 5 of them actually were in positive territory. That's amazing. Start with corn oil, gaining 10.23% as a comeback hit among the big 7 on Monday. 3.936 million ordinary shares. That's quite a comeback for that. Stocks 41.17 at the closing bell. 40 oil came back to 47 naira per share, up by 2.17%. 1.146 million ordinary shares in trade. Mobile also added 10.25%, tracking corn oil. 3 of them in millions of share transactions, 319.72 for mobile. MRS remain unchanged, 39.03, shooting gray. Then you have Oando coming back to 8.30. Share price 2.85%, 7.7 beating the rest in terms of volume. That happens almost on a daily basis. Then Seplat 3.50 unchanged, and Total another green shoot 2.67, 1.87 better on 94,771. So put that together and you can see the sectoral index at a positive 3.5% reading. Year to date, that's 7.6%, slightly better, about 3% lower than the broader market gain. Price to earnings 84.3 against 11.3 multiples for the market, according to data we sourced from United Capital. And dividend yield still sitting at 2.0% for the oil and gas stocks, those big 7, and about 2 or 3 others out of that, which are smaller cap. We don't have those few ones, those ones on our coverage, but of course that's what the entire sector index looks like, oil and gas, the market here. Okay, that's fuel and hydrocarbon business. Let's talk about Agri-Commodities. Bolanle Olutosin, who is one of the research analysts at Financial Derivatives Company, is here this morning to talk to us a little bit. Let's drink some tea and coffee, shall we?
Hello.
With some sugar, isn't it? Inside the cup, then put some wheat on the table, add us some pastries, isn't it? What exactly is the, and we're going to start with cocoa, and I'm really wondering, prices so down massively because Ivory Coast and Ghana, our closest 2 largest cocoa producers, seem to be going through some tough time.
Yes, so over the past year, cocoa price was about $3,000 per metric ton, but now it's down to about 1,900 per metric ton, and it comes to question like why this big price drop. But over the years, we've also seen that supply from these 2 countries have actually increased by a large amount, a significant amount, and as a result, from the price drop, you know, you have Ghana losing about $1 billion, you have Ivory Coast losing about $4 billion as a result. But then with the farmers in Ivory Coast, they've increased production, but at this point, they're resilient about, you know, how, you know, this supply is increasing and how they're not actually meeting their margins. So we've seen a situation where they're, you know, talking about the fact that they're going to start cutting supplies down so that it could increase prices. On the demand side, we haven't really seen any huge changes to demand for cocoa worldwide, but then, you know, the supplies from these countries have already, you know, increased by a large amount, which has, you know, created this supply and demand imbalances in the market.
If demand is sluggish, yeah, then you have 2 of the largest producers balancing some internal political crisis, like in Ivory Coast,
yes,
with some mutinies being reported and all of that. Reports saying farmers seem to be staying away from the farms and all of that. That really brings prices down. We can imagine a 3,000 metric ton dollars per
significant price drop
to nearly 2,000, almost $1,000 or more decline in cocoa prices. And nothing is negative. This negative sentiment, does it look like it's going to go away anytime soon?
It might. might. Given if farmers, pull back a bit on supplies, we should definitely see an increase in prices. Although prices have been volatile, you have cases where, demand has been affected. At some point, Ivory Coast had issues with exporting cocoa. At that time, we saw prices ramp up a bit. But so if they do work on the supplies for now, then we should see increase in prices as the outlook.
Let's move on to the first part there on wheat futures. Wheat is very, demand for wheat, I'm not sure that tapers off any time at any point because folks use it for pastries and things like that and for some direct consumptions. Dry weather in the U.S., this climate change is back now into the conversation as far as wheat and corn is concerned.
Yeah, well, in the summer period and in northern U.S., you have states like Texas, Colorado. These are places where, they grow wheat. And the climate change has really affected, the temperatures in those areas. They're usually, hot regions. But then, we've seen with the climate change, the temperature even, go up to a different level. And that has affected, the production of or the supply of wheat in those regions.
Do we have any other regions that could balance this out a little bit? If we have pressure, if we have issues in the U.S., are we looking to somewhere in Asia?
Yeah, well, China is also facing the same issues with weather conditions as well. It's also one of the top producers of wheat. And, this is just a temporary situation. By September, November, we should see a different, so the short-term outlook is just an increase in prices due to cutbacks in supply. But after a few months, we should actually see supply, boost or increase back into the market.
If these commodities keep going this way, one way or the other, they're going to flow in, they're going to feed in to the local market one way or another.
Yes, definitely. But at this point, with the exchange rates, the parallel market has gained significantly. It has appreciated. We have the importers, exporters, investors, exporters window as well. And all this does is just reduces the risk of smuggling, goods out of the country. It's not going to be extremely attractive anymore. So we shouldn't really see the effects of, what's happening in the global sphere to, affect Nigeria as much. But then, we're obviously a, global entity, the world, we're all connected. So we will definitely be affected a bit.
What about sugar? Let's bring that into the into the conversation a little bit. If sugar prices is down 7.46%, lower than expected demand, even though supply is really steady. We have our own domestic issues as far as sugar is concerned. But from the global point of view, where are we as far as this commodity is concerned?
With sugar, it's a different situation. The prices have been extremely volatile compared to the other commodities. But one issue is the health concerns. It seems like more people are more conscious or cautious about, the intakes of sugar. So that has actually reduced.
Don't ask me if I have any cubes inside this mug of tea. Don't ask me. Don't ask me how many sugar cubes that I have. I'm not going to disclose.
No, but more people are more cautious about their health. So sugar has actually reduced, or demand for sugar has reduced on that front. But then you also have the trade dispute between U.S. and Mexico. Mexico is one of the top producers of sugar, and their main demand was from the U.S. But with Trump, imposing tariffs and all that, trying to build a self-sufficient America, we've seen imports drop from Mexico, or exports drop from Mexico to the U.S. from about 54% to about 30%. So that has also explained, the recent trends that we've seen in sugar.